Welcome to the Transparent FX Academy. I'm Nick, and I'm a top author and TradingView with over 190k reputation points.
In this video, I will be speaking about gold. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders, so the COT data, so essentially what hedge funds and the big players in the market are doing and how they're shifting their orders. And by the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. So this is definitely a video you do not want to miss.
If you're new to the channel, make sure to subscribe. This is the place to be for high quality, free trading education. Now, without further ado, let's jump straight onto the charts.
Starting here from the monthly time frame, what we can see is that at the moment we have a market which is rejecting to the upside a quite strong historical monthly support and demand area. In fact, what we know is that from here, all these previous rejections to the downside have been created. Every single time that the market tested this zone, it got rejected to the downside quite aggressively. And we can notice how just a few months ago, the market again broke above this level with this impulse, creating a monthly close above the zone. So all that previous resistance was turned support here. The market tested the area and is currently still in the process of rejecting that zone to the upside. So from a monthly standpoint, everything seems quite bullish and more bullish price action could be expected away from this area. Dropping down on the weekly time frame, what do we see? Now, here on the weekly, we can see how, again, there's quite clear structure being created. We can notice how the market has now broken out from this weekly range. We had here, in fact, clearly a range from a weekly standpoint. We had the high of the range holding up here as resistance and the bottom of the range holding up here as support. Then the market with this green candle here broke above the range and all that previous resistance was turned support here. The market retested it and is currently still in the process of rejecting it to the upside. So we're currently in a breakout from the high of a weekly range type of situation here from a weekly standpoint. And at least at the moment, if we look at the long term, it seems like more bullish price action could be expected. However, it is also important to keep in mind what kind of structure the market creates when it is in an uptrend. In fact, when the market is in an uptrend, what you would expect is the market create a series of higher highs and higher lows. You don't expect the market to just go straight up. So after every impulse, you expect the market to essentially provide a correction, and the market is doing that quite precisely. In fact, following the breakout, we had an impulse, correction, and now again another impulse. So essentially a series of higher highs and higher lows, which is the definition of an uptrend itself, a series of higher highs and higher lows. So since we just had yet another impulse, at this point, the natural next step would be to see another correction. That is what naturally the market in a situation like this is supposed to do. Now, since we have an impulse, if we want to measure the correction, we have to take our Fibonacci from the low to the high of the impulse leg. And this shows us how we have the 0.32 50% and 0.618 Fibonacci retracements all lining up exactly at this area. And if we extend that zone to the left, we can see how this is also the previous weekly resistance turned support. Therefore, what we have here is confluence of support at this area that this market might want to go and test. So there is some kind of demand and support lying up at this area that this market might want to go and test. So from a weekly standpoint, there is a possibility of seeing some short-term bearish price action. Dropping down the daily time frame, what do we see? Now, from a daily perspective, I did speak about gold a few days ago when the market was around this area. I explained all the reasons for which there was a good probability of seeing a potential rejection to the downside, for the market to test this zone and then be rejected to the upside. And in fact, that is exactly what the market did. And by the way, I will link in description that previous analysis classes, so you can go and check it out for more free education. But at the moment, we can notice how in creating this push to the upside, the market has also printed this overextended W formation. And in general, after the creation of an overextended W, what you would expect is for the market to create a potential rejection to the downside for a retracement to the 0.32 of the Fibonacci taken on the impulse leg, which, as we can see, if we take our Fibonacci from the low to the high, has still not been tested. And overextended W formations are patterns that the market likes to create over and over again, in my experience. We can see, for example, here we had an overextended W. After that, the market created a rejection to the downside. So it is a quite standard pattern. It's obviously not every time, but when there is such pattern, in my experience, there is an increased probability of a potential rejection to the downside. And at least that is how I like to look at it. Now, if we go and see what we have before we dig into more details into what we have here from a technical perspective, if we go and see what we have when it comes to the commitment of traders, so the COT data, so essentially what hedge funds and the big players in the market are doing, you might have noticed that with the last reports, net positions have been increased. We went from 278K to 286K and then to 296K net positions. So this shows an increase of the net positions, which makes gold stronger. However, at the same time, we can see how shorts are already starting to build up. So even though in the long term, yes, everything seems quite bullish, institutions anyway added 4.5K shorts just with the last report. So with the last reports, we can see how we went from 48,000 shorts from an institutional perspective up to 75,000 shorts, which could be enough to trigger a potential correction and some short-term weakness before then, yes, absolutely, potentially following higher, but at least in the short term, there is a good probability of a potential correction lower, in my opinion, for that that higher low to be printed from a weekly perspective to follow up with the weekly uptrend that we were previously identifying. So in a situation like this, especially if institutions will be adding more shorts instead of this area, what would I expect? Well, as usual, trading is reactive and not predictive. The monthly, weekly, and daily timeframes combined with the COT data, those are the best timeframes when it comes to the directional aspect of the market. However, when it comes to identifying early shifts in the trend of a market, the best timeframes for that are the intraday timeframes, so 4 hour and lower. Therefore, what I would expect is that if this market would shift from an intraday bullish to a bearish market, at that point, I wouldn't be surprised to see a potential rejection to the downside below this resistance level and also creating that higher low from a weekly standpoint. That definitely wouldn't surprise me. Now, if you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website, which you find linked in description. Here, you have the possibility to gain access to the most complete mentorship program ever that I have created. You have the possibility to gain access to all the courses, the trading station software with the Telegram signals integration, one-on-one private mentoring directly with me, the COT data software that you see me use in all these videos. And if you continue to scroll down the website, past the testimonials, you will see that you have the possibility to join and gain automatically access with the email and password that you will create during the sign-up process. So I really suggest that you go and check it out. The link is in description and I will see you in it. If you enjoyed the video, make sure to drop a like. Also, let me know in the comments below any pairs or topics that you would like me to cover in the next videos, and I will see you in my next breakdown.